Hey everybody, good morning. It's Pete. Welcome to Stocks for Breakfast. Today is Tuesday, March 17th, 2020. Obviously a massive bloodbath in the market yesterday. We are down just a little bit this morning, not as much as you would expect. However, we were actually up overnight and we're actually pulling back and testing support levels right now. But in today's video, I want to discuss something that happened to me a lot early in my trading career that I hope today can really be just one quick switch for you. And that's when you feel like you're making the right trade, but you end up losing money a few trades in a row. And I guess really the point I want to get across is you look at whatever you're looking at, and we're going to use what I taught yesterday, which is basically the opening price. And there was some really good opportunities in the morning yesterday where price opened lower and then immediately started to trade above that. So from a short-term perspective, it was the right trade, and price remained above that level, but it started to slowly drift down. So we were trying to take advantage of short-term oversold price action, short-term buying, but then we just kind of slowly, even though we were getting entry signals, we kind of slowly started drifting down. So those later buying opportunities, let's call them buying opportunities 2, 3, and 4, didn't follow through. So what I'm going to show you today is a really super cool where you reset super cool indicator, but it's really just using technical analysis. It's just reading the tape, using a different chart without using indicators that helps you reset whether you want to be long or short. And I guess the easiest way to explain that is if you can imagine how a daily chart resets the next day, we're going to be doing the same thing on an intraday basis to immediately let you know whether or not you want to be long or short on a short-term time frame. Again, if you're new to the channel, please click down and subscribe. We'd really appreciate it. But also, if you're new to the channel, we're sticking only to day trading opportunities right now because obviously the long-term signals are kind of a mess right now. We're not really trading off long-term support and resistance levels in the charts anymore. They really don't matter, quite honestly. This is a global pandemic, so we're just trying to do our best to capitalize on the short-term volatility and be professionals that this is what we do for a living. So we're going to go to the charts. I'm going to show you first news. One stock is reporting earnings today that is obviously being affected by what's going on, and then we're going to actually go to the charts and take a look at that. So I'm going to share the screen now. And right out of the gate, you can see FedEx actually has earnings today, and it's after the market closes. So FedEx after the market closes today, definitely something to keep an eye on. The stock symbol is FDX. And even if you don't trade earnings after hours, which personally I don't recommend anybody does unless you are a super experienced trader, because liquidity dries up after hours and it's a very different trade. It's a little bit better for inexperienced traders to wait the next day, see how it plays out, and then find your spots to trade around. So what I want to talk about here very quickly, because it doesn't need to turn into a monster lesson, but we'll give some examples. You can see actually the futures, we closed right around here in the afternoon, but then you can see we rallied. We actually had a relief rally. This is probably from the global leaders around the world upping their response. I'm sorry, still didn't drink all my coffee yet. The global response seems to be better from governments, and people are satisfied with that. Then the reality kicked in that nothing has really changed, and we kind of just pulled back. What's interesting here is you could see in the ES futures in the June contract that we're kind of holding this bid at 2380. Now, I just said we're not looking at anything long-term because the charts don't matter, but this is 3 days worth of price action. Last Friday, yesterday, and now early this morning, it's just around 6 a.m., where this level is now held. So now we actually have a level to use to read the tape. Remember, tape reading is, do prices get closer to or further away from a significant level? And right now, that number is holding. So whether we hold right away or whether you trade it below it and come back up, that's going to make it a significant number. So you need to write that down, 2380 in the futures. But what I want to get to is I'm going to pull the SPY up, and I'm going to talk about what I meant about as far as trading opportunity yesterday. So again, if you're a regular viewer, a regular subscriber, which I really appreciate, this is the level that we've been talking about to gauge whether or not you want to be long or short. Normally, this will tell us if the short-term order flow is in sync with the long-term order flow. So if we're above the opening price and long-term, the trades are bullish, the order flow is bullish, meaning buyers are in control for the last quarter and maybe 6 months. This is the short-term line in the sand that if it's above that, you are now in sync with longer term, and you can increase your conviction level in trades because you're trading with the smart money. Then we take into consideration the previous day's high and the previous day's low, and those are other levels that we're using to determine, okay, we're above yesterday's high. Are we higher highs and higher lows on the daily candlesticks? So again, we're stacking the odds, creating a good argument. The stronger that argument, the stronger your conviction in trades, the more aggressively you can trade. And again, aggressive means more share size, more positions, and holding longer. Remember, the better job you do of building that argument, you will hold good trades longer. It's a subtle thing where people miss that last part where you need to know your trade management before you get into the trade. Now, could circumstances change, like traffic all of a sudden becomes stop and go and wide open? Sure, something could happen where other money is flowing into the sector and you notice in your stock watch everything is trading green. But for now, those are the most simple ways of identifying. But here's where I want to get across. I'm going to pull this over so we can take a look at this as if it was unfolding, right? And again, I said yesterday, I hate when people do this. Oh, what I would have done yesterday. That's not what I'm doing. What I'm showing you is how to a strategy for you to use today and going forward. So up till this point, we ended up trading above the previous day's high. We get inside candlestick breakouts here. Excuse me, not inside candlestick breakouts. This is the opening range here, so that would have been the breakout here, this candle. And this pause would have actually been the first spot to get long. There was really no place to enter here. So let's just say, for argument's sake, you look to get long at this pause, and this next pullback happens. And you can see that you actually got a bullish candlestick here, traded below this candlestick and reversed. I'm actually going to make it bigger, right? This would have been the second entry, and there was nothing wrong with that. You actually had a pullback and then an entry, right? And you see you don't make highs. And then as price action continues to unfold, you get another entry that fails again. You get another entry that fails again. But you're still above the opening price. So like, what the heck? I'm doing exactly what I'm supposed to be doing. I'm buying stocks that are going higher. Yes, you are. There's nothing wrong with that situation. So I'm gonna show you how super advanced active day traders get around this with a super simple strategy. All right. So we just talked about identifying trends, longer time frame. We talked about the opening price. Now what I'm going to do is I'm going to throw a curveball at you, and we're going to use the hourly candlestick. And we're going to say, okay, I have my criteria of the opening price. Now I'm also going to throw in that I'm going to reset this every single hour. So in other words, when the next hourly candlestick charts, which is the 60-minute candlestick, that's how I'm going to identify a new trend. So now you have a choice. If I'm above the opening price and the candle's green, I could trade confidently, meaning I have more to the argument. That's the key, right? If we're above the opening price and the hourly candle is red, that means the current hour, the current order flow for that hour is now selling. So you have to make a decision. Yes, you might be getting signals on your lower time frames, your 5-minute time frames, but now the current hour is conflicting that. This is a way to stay away from bullish signals in a bearish environment. And what this is actually really telling you now too is you don't have clean signals. You don't have your perfect trade. Remember what I've talked about, and I'm just going to come back to the screen here to emphasize this point to make it a strong one. You have your A+ trade, right? And you need to know what perfect looks like in order to know every trade that's not perfect, because the further away you move from perfect, the lower the odds of follow through, the lower the odds of probability of it doing what you think it might be doing on just because you have the entry signal. So a perfect trade is just using the most broad distinctions, not necessarily giving you a strategy, but giving you ideas to build an argument. Above the 20 period for bullish, you want to be buyer. Above the 20 period moving average. Higher highs and higher lows on the daily candlestick. Change from the open is positive. Change from yesterday's close is positive, and today's hourly candle is green. All of those, let's just say for argument's sake, that's a good bullish argument. There's a lot more that goes into order flow, but that's a good bullish argument, right? And then all of a sudden you have a red hourly candlesticks, but you get green, but you get these entry signals on the 5-minute chart or whatever time frame you're looking at. but you're getting conflict. So now you're moving away from perfect. You're moving away from your A plus trade. You're moving away from the top of the scale. That's the area where great traders avoid losses and wait for the signal to be perfect again. So if we go back, and if you want to be a great trader, these are the little things that add up to monster money in or out of your account at the end of the month. So if we go back to the hourly candlestick here, you can see the last 1, 2, 3, 4, 5 hours of the day. So the market's open 6.5 hours. If I'm not mistaken, you need to determine in your charting software. I use TradingView. To me, it's just a really clean, affordable charting package. Again, I don't get a dime for saying that. Some packages have the first 30 minutes, and then the rest of them are hourly candlesticks. Some have the first candles are all hourly, and then the last one's 30 minutes. You just need to know where the hourly candlestick resets. And that's really the way to do it. So I'm just going to go, let's go over Tesla for argument's sake. And we're just going to draw a trend line in Tesla just to give you an example. We use something that moves quite a bit. So there's the opening price, right? So the opening price, we only had one candlestick in Tesla that actually was green. So the rest of the day, Tesla was in bearish hourly order flow mode. We were below the previous low, below the close, all those things. Right now, I'm gonna make 2 points here. We're gonna go back to the short-term time frame in Tesla, and then I'm gonna answer a question that I know you're gonna have. You're gonna be like, well, the candlestick changes by the hour. How am I, it could be positive, it could be negative, and the answer is yeah, absolutely. The same as any other trend, right? It doesn't matter if it's a trend on a 1 minute chart or a monthly chart going back 10 years. Trends change. So you have to adapt when trends change. This is the biggest place where traders get caught up. They're like, but it's not absolutely right out of the book like it says on page 27. Yeah, no kidding. And neither does the highway. You get on the highway, one day you do 55, you get on the highway, next day you can't do 30. You have to adapt and pay attention. So don't make excuses. Be a tape reader. If it changes in that same hour, then you have to adapt and make a decision. Be an adult who's going to the market to make money and be awesome. So let's go to the 5 minute chart. Here's the 5 minute chart and the opening price. That's technically down there, right? We know this is the opening price because that's the opening 5 minute candle and it's red. So the open's up there and the close is down there. So you can see we're kind of dancing around the entire time. And at this point, we actually get above the opening price. And if you remember back on the hourly chart, that was the 1 hour that it got green. And then let's actually look at where the next hour starts, which is right here. This is the 12:05 candle. So this hour right here starts to be red. Now you have a conflict. You're above the opening price, which is short-term bullish, below the previous day's low, and now this current hour is green. So what do? I'm going to come back to the screen. What do you do when you have conflict? Stay away where you have conflict because you have lower probability of follow through. But then you got hundreds of other stocks that you could potentially go and say, the market's down. What stocks are below the opening price? What stocks are negative from yesterday's close, which yesterday was probably all of them. But the opening price was different because it wasn't all of them. So if you have the stock watch where you have change from the open and change from the close, you immediately sort them by which ones are negative right now, both of them, if your current hourly candle is negative, and stacking the odds. Now you're below the opening price. Which one of those meets that criteria? Because Tesla doesn't meet it at 12 o'clock. Could you short Tesla looking for a profit potential down to the opening price? Sure, you could have, but a better trade would have been one that was actually under the opening price at that point. So you see how you're making these decisions. What's the best trade? And if I move away from the best trade, which of those trades would I want to take? Now, here's the key, and I'm going to end the video on this. Great traders don't take mediocre trades. If you aspire to be a great trader, you need to learn to teach yourself to stay away from mediocre trades because those are the trades that are draining your account silently and you don't even realize it. You're like, oh, I took a small loss. Oh, I took a small loss. Oh, I took a small loss. And it doesn't feel that painful, but that's the reason you don't get paid. If you aspire to be somebody who makes the stock market make the money, you need to understand what your A-plus trade is, and hopefully I'm giving you some arguments to understand how to do that, and then stay away from them. Only take your perfect trades, and those are the trades that are going to ultimately make your sample size of, you might lose some trades, but over time, because you took good trades, the probabilities are on your side to understand how to make money on a regular basis. So we just gave a pretty good strategy, and we keep adding to the pieces. So if you have any questions, absolutely feel free to leave a comment underneath the video. And before the market opens today, go over your stocks from yesterday, whatever you happen to have traded. You can actually go and see what you would have done. Okay, and have the hourly chart next to the whatever the short-term 5-minute or 15-minute chart is. This way you can see them unfolding at the same time, and just see what you would have done. And here's the key: we're not calling yesterday; we're being prepared for today. If you can do that, you'll start to develop the habit of saying, "Yeah, that looks good on the 5-minute chart. That looks like a perfect bull flag, but it doesn't meet all these other criteria, so I'm not going to take the trade. Just the entry signal isn't enough for me to say that's where I'm going." It's kind of like having a map that only gives you rights and lefts, but doesn't tell you if you're going north or south, and you have no idea if you're going in the right direction. So I hope today's video helped. Thank you for attending today's Stocks for Breakfast. I really appreciate it. Click below to subscribe, and I'm probably going to do a video later if I have the time. If not, definitely sometime during the week, where I'm going to show you the same thing on higher time frames, so you can use the same signals on weekly and monthly charts to use as swing trades that we just discussed on this shorter time frame. So it's Thursday. That's how much the days are blending now. Tuesday, March 17th. Have a great day, everybody.